All right, let's talk about one of the boldest, most controversial plays on Wall Street right now. A massive, all-in, leveraged bet on Bitcoin. I mean, you've got people on one side calling it absolute genius, and folks on the other side just waiting for the whole thing to implode. But what if they're both looking at the wrong thing? Today we're going to deconstruct the real risk. Is it a sudden, fiery crash, or something a little more subtle?
First things first, you gotta understand the scale we're talking about here. It's just massive. One company, MicroStrategy, is sitting on a hoard of over 720,000 Bitcoin. To put that in perspective, that's over 2.5% of every Bitcoin that will ever exist. They are, by a huge margin, the biggest corporate holder in the world.
So here's our game plan. We'll kick things off with the big, scary story everyone talks about, the forced sale. Then we'll pivot to the bull case, which is all about how the company is actually financed. And that's where we'll uncover the risk that really matters, leaving you with the one question every single investor needs to ask themselves.
Okay, let's start with the bear case. This is the narrative you see all over the news, this fear of a sudden market-breaking collapse.
And you can't blame people for being scared, right? I mean, the crypto history books are filled with these epic blowups just from the last couple of years. You had Terra/Luna, Three Arrows Capital, Celsius, FTX. What did they all have in common? Way too much leverage. They all ended in forced liquidations that wiped people out. So that history really hangs over everything.
And that leads to quotes like this one, comparing this situation to the 2008 financial crisis. That's the heart of the bear argument. The idea is that if Bitcoin's price drops far enough, it'll trigger a margin call so big they'll have to dump all their Bitcoin at once, creating this death spiral for the entire market.
It's a terrifying thought for sure, a true doomsday scenario. But is it actually realistic? To figure that out, we have to stop listening to the headlines and start looking at the fine print. How is this whole thing actually funded? Because, not all debt is created equal.
And this right here is where the popular story just slams into a wall of financial reality. The mechanics of the debt are absolutely key to understanding this.
Okay, so look at this. This is the whole ball game. On the left, you've got margin loans. That's the dangerous stuff that blew up all those other crypto firms. It requires collateral, it has these hair-trigger price alerts, one wrong move and boom, you're liquidated. But look at the right side. That's what MicroStrategy uses, unsecured convertible notes. It's a totally different animal. There's no collateral for a lender to seize, no price triggers. The only risk is having to refinance the debt years from now.
And this is the knockout punch for the forced sale argument. As of 2024, the company has zilch debt that is collateralized by its Bitcoin. So there is no lender on planet Earth who can force them to sell their Bitcoin no matter how low the price goes. Let me say that again, no matter how low it goes.
And when you actually look at their debt, it's pretty brilliantly structured. It's all these long-term notes that don't come due for years. And get this, many of them have interest rates of 0 or close to it. This is incredibly cheap money locked in for a very, very long time.
And this is why you see the serious analysts, the ones who've actually done the homework on the balance sheet, all saying the same thing. A forced sale is just not really on the table. But, and this is a big but, that doesn't mean there's no risk.
Okay, so let's shift gears to what I think is the actual risk here. It's not some big sudden explosion. It's more like a slow leak, a grinding erosion of value that could happen over time. This is the stuff that really worries the pros.
The term for it is death by dilution, and it's all powered by this financial engine, this flywheel, that can either work for you in an amazing way or work against you in a devastating way. It all depends on the market.
So when times are good, in a bull market, this thing is a magic money machine. The company's stock starts trading for way more than the Bitcoin it holds is actually worth. So what do? They sell new stock at that super high price, take the cash, and buy even more Bitcoin. The result? The amount of Bitcoin backing up every single share actually goes up. It's fantastic for shareholders.
But in a long, nasty bear market, that beautiful flywheel goes into reverse. The premium on the stock, it disappears, vanishes. But the company still has bills to pay, interest on that debt. So they're forced to issue new shares, but now they're selling them at bargain basement prices. And every time they do that, the amount of Bitcoin backing your share gets smaller and smaller and smaller. It's a slow-motion destruction of value.
And this isn't just a theory. You can see it happening in the data. Because they issue so much stock, the total number of shares out there jumped by about 20% in just 1 year. That's the dilution process, right there in black and white. And it helps explain why sometimes the stock price just can't keep up with Bitcoin itself.
So what does all this mean?
Well, it means that for anyone trying to manage risk, whether you're a long-term holder or even a short seller, the calculation is way more complicated than just, will Bitcoin crash? So let's just wrap this all up. The myth, the big scary story is a sudden catastrophic liquidation. The reality is, the company's debt structure makes that almost impossible. The real risk, the one you need to watch, is that slow erosion, that death by dilution, that gets triggered when they have to sell tons of stock in a down market just to keep the lights on.
So, at the end of the day, the question you have to ask isn't, will they survive a crash? They probably will. The real question is this: is the chance for those supercharged gains in a bull market worth the very real risk that your ownership stake, your Bitcoin per share, gets slowly chipped away in a bear market? That's the trade-off. And that's what this whole bet is all about.